Buying a house is a challenge. And yes, everybody wants to own property, wants to own fixed property. But there is some risks, or rather, let's say, orange lights that you need to be aware of. Number one, if you're not sure that you're going to stay for at least 5 years in that house, be very careful. If you look at the cost of transactions, the way that the residential property market functions, you might lose money if you're not going to stay long in that house. If you're going to stay 5, 7, 8 or 10 years, yes, then it's the best decision that you can make. Number two, a house, if it's paid off, if you lived in the house for 10, 20, 30 years, is probably most people's biggest single investment. But that's because they looked after the house, they made the bond payments every single month, and in the end, it's a house they can sell as an asset. But if those factors are not in place, be careful. Also remember, when you buy the house, most people take out a bond. So that bond is at a specific interest rate. Remember, interest rate can go up and it go down. Currently, we're in a lower end of the interest rate cycle. Interest rates can go up. Make sure you can make your monthly payments, even if interest rates are 2, 3 or 4% higher than today. Make sure you factor into your calculations the maintenance of the property. A property requires continuous maintenance. Otherwise, you're not going to have the asset after 10 or 20 years. You have to look after that asset. And then where do you buy? Be very careful when you pick the area that you buy. Unfortunately, in South Africa, we have suburbs that are going downhill. Rather buy a smaller house in a great suburb than a big house in a suburb that's going down. Yes, there might be suburbs that turn around, but that's the exception. Most of the time, a suburb that's going downhill will not keep the value of that house. Rather go to a suburb that you trust, that you believe there's a lot of activity in, and then buy a slightly smaller house. The key is, make sure you're going to stay there for at least 5 years, and make sure you can afford the property, even if interest rate goes up and you have to do maintenance.